You know, the biggest trade of 2025 might just be setting up to be the biggest trap of 2026. The evidence is pretty overwhelming, but it feels like almost nobody is paying attention to what's happening behind the scenes. See, after a truly spectacular wealth-generating year, the crowd is betting big on a repeat performance for silver. But the very same institutions that saw this rally coming are now flashing warning signs that this whole trade is about to flip on its head. So let's dive in and break down what they're really seeing. 127%. Just let that sink in. That was the staggering return for silver in 2025. I mean, this wasn't just a bull market, right? This was a generational wealth event. The kind of move that turns a modest portfolio into life-changing money. And it's exactly why everyone is talking about silver right now. Okay, but this is where the story gets really fascinating. Platinum? It delivered a nearly identical performance, returning 120%. So you've got two metals, two spectacular, almost perfectly matching rallies. So why is one getting all the love and attention while the other is being, well, almost completely ignored by the crowd? That is the central question we are unpacking today.
So here's our game plan. First, we'll set the stage with that incredible 2025 metals boom. Then, we'll look at the huge disconnect between the crowd's bet and the institutional trade. After that, we'll dig into the case against silver, then the case for platinum, before we pull it all together into a really clear framework for 2026.
All right, first things first. Let's just quickly establish how absolutely incredible 2025 was for precious metals. This wasn't just a silver story, The entire asset class put up phenomenal returns, and that created this powerful psychological backdrop for everything that's happening right now.
And when you look at the numbers, the scale is just wild. You can see silver and platinum are just in a league of their own at 127 and 120%. Heck, even gold, the bedrock of the market, put up an incredible 65% gain. In any normal year, that would be the headline story. But 2025, it was anything but normal.
And that's the crucial point, isn't it? When people see gains like this, that fear of missing out, that FOMO, it just kicks into high gear. They hear the stories, they see the headlines, and they start piling in, expecting that the party's just going to keep on going. And that creates this powerful crowd mentality, which brings us right to the core of this whole analysis.
And this brings us to the real heart of the story. Right now, what we're seeing is a massive divergence between what Main Street thinks is going to happen next and what Wall Street is quietly positioning for. And that disconnect, that's where both the biggest risks and the biggest opportunities are born.
So check this out. A survey from Kitco of retail investors reveals a level of agreement that honestly should be setting off alarm bells. A full 51%, more than half of everybody asked, expects silver to be the top performer again. Now, to put that in perspective, look at platinum. Only 10% believe it'll take the top spot.
And that right there, that's the whole ballgame. We have a 5-to-1 ratio of attention, of expectation on silver versus platinum for two assets that just delivered basically the exact same blockbuster performance. This is what the pros call a sentiment divergence, and it often signals that a major market move is coming that's going to catch the crowd completely by surprise.
So let's flip the coin and look at how this builds into the institutional case against silver. While Main Street traders are overwhelmingly bullish, the big commodity research desks are warning that the entire story that drove silver higher is about to get turned completely on its head. This quote from TD Securities, man, it just says it all. The silver flood. It is the complete and total inversion of the silver squeeze narrative that absolutely dominated 2025. What they're saying is that the very conditions that created that explosive rally aren't just gone. They've been replaced by their exact opposite.
The story of 2025 was simple, a physical liquidity crisis. There just wasn't enough metal to go around where it needed to be. But the story for 2026, according to the big institutions, is a massive wave of replenishment. The market has literally gone from being extremely tight to being flooded with supply.
So how big is this flood? Get ready for this number. Over 212 million ounces of silver have poured back into the vaults of the London Bullion Market Association. That is a staggering amount of metal. It's enough to cover nearly 2 full years of the entire global supply deficit that everyone was so panicked about just last year. The squeeze is over. It's been resolved.
And there's another headwind building. It's a classic economic response called thrifting. Basically, when a commodity like silver gets really expensive, industries get a massive financial incentive to get smart, to innovate, and to engineer ways to use less of it. And that is exactly what's happening right now in key sectors.
And crucially, these high prices are starting to actually destroy demand.
In the solar industry, for example, thrifting is now expected to overpower the growth in new installations, which means overall silver demand from solar will actually go down. In India, a huge consumer market, high prices have crushed jewelry demand, with imports dropping a sharp 14%.
Okay, so if the smart money is turning bearish on silver, where are they looking instead? Well, this brings us to the other side of that huge sentiment gap we saw earlier, the quiet, overlooked, contrarian case for platinum.
Get this, while they're warning of a silver reversal, TD Securities has explicitly named platinum as one of their top commodity picks for 2026. They're forecasting it will outperform what everyone else expects by 20%, while at the same time they see silver potentially declining. That's a massive potential swing in performance between the two.
Their thesis is built on three main pillars. First, a strong macro setup. Things like deurbanization are boosting demand for vehicles, which means more demand for catalytic converters. Second, you have strategic stockpiling. Big consumers are getting nervous about tariffs and supply disruptions from places like Russia, so they're building up reserves. And third, the market is expected to stay in a fundamental deficit where demand just keeps outpacing supply.
Okay, we have covered a ton of ground. We've looked at the retail crowd, the institutional view, the case against silver, and the case for platinum. Now, let's bring all of these threads together into a simple, clear, side-by-side framework.
And when you lay it all out like this, wow, the asymmetry is just crystal clear. For silver, you've got euphoric retail sentiment, a bearish institutional outlook, and a supply story defined by a flood of inventory. For platinum, you have overlooked retail sentiment, a bullish institutional view, and a supply story defined by a persistent deficit. I mean, the contrast could not be more stark.
Now, it's really important to remember that gold is still the big anchor in this market, right? The overall bullish case for precious metals is still very much intact, with institutions talking about a new, higher trading range for gold thanks to things like central bank buying and expected rate cuts. So the question isn't whether the whole complex is going to collapse, it's about where the relative opportunity is within it.
So what are the big takeaways from all this? First, and this is a big one, crowded trades can be really dangerous. Second, institutional positioning often gives you a peek into what the smart money is thinking. Third, high prices often end up being the cure for high prices. They bring out new supply and they dampen demand. And finally, the most compelling opportunities are usually found where the crowd isn't looking.
And of course, I have to be really clear about this. This has been an explanation of a specific institutional analysis. It is not a prediction, and it is most certainly not financial advice. The whole goal here is to understand the competing arguments in the market so you can make more informed decisions for yourself.
And all this leaves us with one final thought to chew on. In markets, the crowd is often fixated on fighting the last war, right? Betting that yesterday's winner is going to win again tomorrow. This analysis suggests that the real story, the real opportunity for 2026, might be happening somewhere else entirely. The question for you is, where is it hiding?